In this video, I'm going to show you how to get a 0% loan, and I'm going to show the use case of being able to buy Bitcoin with that fiat loan, how to do this, what the risks are, what you should avoid, and is this right for you? Of course, that's something you're going to have to decide, but I'm going to show you the data and how to do it, and you can decide on your own if that is right for you. My name is Forrest Hodel. I'm a Bitcoin educator, and I do one-on-one coaching sessions if you need some help with your Bitcoin security, best practices, or answering the questions that you might not even know to ask. You can book me for a session in the link in the description. So where does this 0% loan come from? Well, they come from an unusual place, which is credit cards. Credit cards are typically really high interest loan debt, and it is a terrible way usually to acquire debt. Usually the rates annualized are 15 to 30% depending on your credit score and the card you get. However, a lot of cards do something which is called a promotional balance transfer rate. And those can be 0%. And in fact, I found some examples and we're going to go through those. And the idea here is that there's a promotional rate for a certain amount of time. And then once that time is up, it goes to the initial rate that the card will charge you, which will be high. And I will show you how you can also mitigate that. The first thing I recommend doing is using this prompt here, which is find me all available credit cards that offer good promotional account balance transfer rates in your region. So I've done Canada here, and we have a list of them, and we actually have a chart that shows the transfer fee and annual fee. So the 0% that I talked about is this rate here for 12 months. And you can see some of these go to 99 or 1.95. However, there is this 3% fee on this. So if you transfer $10,000 of debt from one card to this card and get that 0% interest rate for 12 months, you do have to pay an immediate transfer fee of 3%. So you could think of this loan as charging you 3% for 12 months. So the 0%, slightly misleading, although really with all types of loans, you really need to look at the fine print. And what we should actually be thinking of here is 3% for this case. That is the best one in a lot of ways. This one arguably might be better at a 1% transfer fee for 10 months, and then it has a $29 annual fee. Your rate, your interest rate that you're paying is going to be $300, and that's upfront for a $10,000 loan. Now, let's look at a comparable example, which is something I've talked about in the past here, which is taking out a collateralized loan using your Bitcoin, using a system or a product service like Ledin. Ledin right now charges 12.4% per year for its interest rate, but you don't have to pay it up front. You pay it when the loan is due, which is an advantage considering that over time that fiat is being debased. However, you end up paying $1,240 for a $10,000 loan, and you have to put up $20,000 of initial Bitcoin because the loan to value is 50%, and you have the risk of margin call, you have the custodian risk. It's securitized by your Bitcoin. Now, there's going to be some advantage to that potentially, which is that you can do it in size. If you have a lot of Bitcoin, you're not limited by what these credit cards are willing to give you for debt. So a credit card, depending on your current credit standing, other loans you might have, your credit rating, it might be fairly limited with what you can get just based on a character-based loan, because there's no collateral behind this debt that you get with a credit card. It's a character-based loan. They're basing it on your character as a borrower. That is one limitation here, is the size of loan that you can take out. The other main consideration I would say with this is the duration. I advise this to everybody that I talk to about Bitcoin that is ready to buy. I ask them, and I kind of explain to them that you need to hold this asset for 4 years. So there's duration risk with a loan like this because of it's only 12 months before it goes back up to its current balance transfer rate that it has. So the duration risk of these loans is caused by the volatility risk of Bitcoin as an asset, or Bitcoin derivatives, if that's what you end up doing with this loan. So that's because you could buy at the wrong time. You could take out this loan, you could buy Bitcoin, and we could have a correction for an entire year. And you're needing to pay back that interest plus the loan amount, and you can't necessarily do that from the asset that you've acquired because it's gone down in value, so you're sort of out of pocket. Now, the trick to this, and shout out to Sonny Poe, who I talked with on Maple Bitcoin, he has around, I believe, like $40,000+ of balance transfer 0% loans that he's doing. And he did this at a really opportune time. I believe he bought Bitcoin at around $37,000. And he just continually rolls these. So what you could do theoretically is you could take out a loan, say you get approved for $10,000 with this one. And when the 12 months is due, you could search again, or if these are still available, you would apply for one of these and you would transfer the balance from this card to this card, right? And then again, you're paying the transfer fee, which in this case is 1%. Perhaps you have a $29 fee for the card, and you have another 10 months of run time before that becomes due. And perhaps you can just roll it to this one, right? And you could find other ones to roll it to, potentially. Now, let's look specifically at this card. So there is an interest balance transfers of 17.99%, and there's a promotional rate here of 0%. And so if you didn't roll it, you would end up paying 17.99% per year on the balance that you have that you bought an asset with. And that's pretty high. That's pretty high to outperform. I mean, Bitcoin can do it on a regular year. But again, the duration, there's that duration risk you should think about. And perhaps that's too high. And that's going to eat into the profit that you're getting anyway, right? So the best case for this is being able to apply and get approved for another 0% balance promo card and rolling that into another one. The sort of a middle best case is that you have to pay back the loan in full, and you can do that with the price appreciation of the asset. Now, there might be tax implications of that if you're selling that asset to do that, and hopefully that asset has outperformed. Now, there is sort of another case that you could do, which is paying off the loan with post-tax dollars. So income that you're already going to pay taxes on, so that you don't have a tax implication of selling the asset that you've bought with the loan to pay that loan off. So one other technical thing I just want to cover here really quickly is if you take out, if you get approved for this credit card, you can't just use the credit card to go buy Bitcoin, for instance. You have to have another credit card. So for instance, I've got a credit card with my bank, and you can actually transfer internally the balance available on that card to your bank account. And so therefore you have, say, again, a $10,000 balance on that card. And then you would go through the system from the new card that you've been approved for that has the balance transfer promo, and you would initiate a balance transfer from your other card to this card. So you transfer over the $10,000 balance to this new card. You're not actually using this card to go buy an asset like Bitcoin. You're doing it with the balance of a different card, and potentially, using a cash advance to do that, or transferring within your own account to get access to that fiat. And then you're using that fiat however you see best fit to outperform the 0% interest and the potential transfer fee that you have associated with this loan. So I'm going to talk Canada specific here for the next little bit, but you can relate this to yourself regardless of your area that you live in. So in Canada here, we have a tax-free savings account, which is something you might want to look at, what kind of tax advantaged accounts you might have to be able to do this strategy and based on your region. In Canada, we have a tax-free savings account. If you have contribution limit availability, you could do this loan again for $10,000 as an example, and you put that $10,000 in the TFSA, and you would buy a Bitcoin ETF, you could buy a yield instrument, you could buy MSTR, and whatever goes on within those instruments, if you were to sell them or they were to deliver some sort of dividend or income and you withdraw that, there's going to be no tax on that. So it'll be a tax advantage strategy, which I think is really important here. So my strategy as a Canadian would be to do this loan, move the 10K into my TFSA, buy MSTE, which is a product by Harvest, which is an ETF that buys MSTR shares, and they add 25% leverage on their fund. So they buy more than the actual AUM of the fund. And then they sell covered calls on 50% of the shares. So 50% of those shares see the upside potential of the full upside potential, and 50% of them earn a premium by selling contracts against them. So there is a slight cap of upside, but because of the added 25% leverage, this fund has performed really, really in line with the underlying actually, but had the additional payouts. This fund pays out monthly. And one thing I forgot to mention earlier is that you need to make the minimum payments on these balances on these credit cards. It's unlike the let-in account, which comes kind of full. The amount comes due at the end of the year. You don't have to pay for it. You don't have to have fiat on the side. In this case, you do need some fiat on the side to make the minimum payments, whatever that ends up being. Of course, there's no interest added to those minimum payments, but there is a minimum payment due on the balance. So having a yield-bearing product like MSTE that pays out monthly, I could use that dividend, I could reinvest it, I could do whatever I wanted with it, but part of it would go towards paying the principal or the minimum payment at least. And another thing that should be mentioned here is, depending on what else you plan to do around debt, you don't want your debt ratio to go above certain levels. So if you do this in size and it becomes, and then you go and apply for a car loan or a house loan or something like that, this credit card loan could go against you in all the factors that they factor in to make you eligible for a loan or not. So that is another thing to consider, and you need to look into your current jurisdiction. But I believe it's that you don't want to have 30% or more of your ability for loans based on your income and all of that in debt already. Now, if I only wanted to do this for a year, I would sell the MSTE that's in there to the equivalent amount of the loan that is due, say 10,000 at the end of the day. Might be even a little bit less because I've been paying a minimum as well, but there's no interest on that minimum. So I have been paying some of the principal off. And I will have hoped that MSTE has gone up in share price as well, so that when I sell it, I'm actually left with some shares at the end of the year. And then that's sort of house money, right? I took out that loan. There's $300 associated with it, the 3%. And at the end of the year, I have some extra shares that are now paying me and appreciating in value beyond that. Now, you could, again, just continue to roll these into new credit cards that have balance transfer promos going on. So this is a total game changer, I feel like, as far as getting access to cheap debt. And it is sort of a weird, finicky thing that feels a little bit sketchy, feels a little bit weird. But again, you're not risking any assets like you are with a securitized Bitcoin loan. It's a character-based loan. There is the potential of issues that come up. And again, the duration, I would say, is the biggest issue with this, and the potential inability for you to roll this over and having to actually deal with the total principal that comes up in a short duration, like a 1-year term. I think that is the highest risk part of this. Otherwise, it feels like a little bit of a cheat code, and it's definitely not right for everybody. I think it's something to consider and something to look at if you haven't heard about this before. If you haven't seen other people do this, I actually know multiple Bitcoiners that do this, and it is a way for us retail folk to get access to these incredible cheap rates that other big corporations are doing while they perform a speculative attack on the dollar by shorting the fiat and longing the Bitcoin. We can do the same in our small retail way in these kind of smart strategies like this. Again, you are taking on risk when you take on leverage. You definitely need to look beyond just what I've talked about here. You need to look at region specific. You need to potentially, get help beyond what an AI could help you with, beyond what I could help you with. You need to look really deeply at your situation to see if this is a right strategy for you. But I do want to, I just wanted to bring this forward in case other people aren't aware of it and could take advantage of it and elevate their life. Something to consider, something to look at. I hope this video was helpful and interesting to you. And again, if you want to book me for a one-on-one session to talk Bitcoin, you can do so in the link in the description. I also have affiliate links and discount links for a Bitcoin exchange, a Bitcoin wallet, a Bitcoin node and sovereign computer, and a seed phrase stamping kit. So use those codes in the description, support the show by doing so, and get yourself some money off of the best products, I believe, for the average Bitcoiner out there. All those links are in the description. Thanks everyone for watching, and we'll see you on the next episode of Bitcoin, Not Crypto.